Bitcoin is on the move, but where are we heading next? Today in this video, we're breaking down the key data and trends that you need to know to stay ahead. Stick around to the end of the video as I will be sharing a full Bitcoin analysis with everything that we deem as important, the exact price levels where we are watching for a turnaround, for a support zone, and so on. And also in the very end, I will be sharing what we are doing with our trades, where we enter positions, where we exit positions, and if we currently have a position open. Let's get started with the structure. And we think that a wave 3 has topped on the 17th of December, and we have since then seen a wave A to the downside, and are now in a wave B to the upside, and will see another wave C to the downside. This is currently our primary scenario. Of course, things can change, but I will outline to you in the next few minutes why exactly I think this will happen and where exactly the price will go. Let us start with the liquidation heat map, and this basically just shows where a lot of liquidity is sitting, which is an incentive for market makers to push prices to these levels to liquidate those traders. Right now, you can see there is some liquidity sitting just above the price at around 100 to 101,000, and there is some decent liquidity below at 90k and between 80 and 70,000. And please remember these price levels for later in the video, where we are going to be sharing our price points where we think prices may turn around. Remember, 101k, 90k, and between 80 and 70k. Now let us look at this data. And as we can see from the price, we can't really read too much from this because this is just some sideways chop. Nothing too major, no big spikes, no big dips, nothing. What we can see, however, is if we look at the open interest, and I will visualize this here for you, is that we've seen basically a steady decrease in open interest. That means less leveraged positions are in the market, both long and short. And if we look at the funding rate down here, we can also see that this has also been basically staying the same. What does this indicate us? Well, if you combine these two factors, you can basically tell that open interest has been going down, less leveraged positions, but there has not really been a change in more short positions or more long positions. It's just less leveraged positions overall, which means the market is just cooling off. We're in the sideways consolidation, and we're probably waiting for the next big move. This is in line with us currently being the time of this video. I'm recording this on Sunday. Nothing usually happens on the weekend, and things usually start to happen on Sunday evening. So in the next couple of hours, probably when you see this video, the move has already happened. Spot volume is also in line with our weekend price action, and our other data is just basically been, as you can see it down here, there's been nothing. There's been basically no selling or buying. It's neutral. It's the exact same level as we have been on when it was still Friday. So nothing major to be reading from here, except that there is no liquidity that needs to be shaken out or anything. Open interest isn't crazy high, no spot buying going on, nothing. It's just neutral, which is normal for a weekend. Now, let's get into these two tweets, which are very important for this one for the short term and this one for the long term. I will start with the short term here, and this is by Dan Crypto Trades on Twitter. Feel free to check him out. I like to use him in these videos because he does very good analysis. And this is basically just the CME gap visualized. You don't need to fully understand what this means exactly. Concluded, prices tend to move to fill this gap, which would be here at 98.273k. We're currently at the time of the screenshot 97.6k. If we look at the current price, we're basically at the exact same price. Nothing's happening over the weekend. So for the short term, and of course it's not financial advice, just our opinion, we're still expecting the CME gap to be closed and just us pushing to the upside. And this is also in line, if you look at this current scenario, which we think is happening, with our B wave, which we need to push higher for to fulfill this and reach this support zone. We will come back to this in a few minutes. So for the short term, we think prices will probably rise. Now, let us look at this one, which is more about the entire cycle. I will just read this. And he's saying Bitcoin almost exactly 1 year ago, when the spot ETF launched, which is the left picture that you can see. And the the right picture is where we are currently. And he's saying this year we have the inauguration of Trump in January with similar price action throughout the end of the year. And he's saying, let's see if we'll get anything similar to last time. And what we can say is the ETF launch, as well as Donald Trump being the next president, are both catalysts which are very bullish for the overall crypto market, but also for Bitcoin. Trump is very pro Bitcoin. He's creating a good environment for cryptocurrencies to thrive, basically. And it could be, it doesn't have to be, but patterns tend to not repeat but to rhyme, is that we're seeing something similar and we will see from this a rise. We don't think it will be quite as bullish, at least not in the short term, as outlined on this right chart. Again, where exactly we think prices are going, we get back to in a second. But we also think that the correction isn't yet finished, which is a very important caveat to some of these predictions. And now I will get to where exactly we are watching for prices to turn around and what exactly we are doing. I would like to start with a short introduction to Elliott wave, because some people may have a hard time understanding. These are not guaranteed things that will happen. They are just, Elliott waves just gives us levels to watch, or we can say, okay, we are watching for a turnaround in this price reason, where in this. Let me start with a short introduction to Elliott waves, because it might be hard for some people to understand, because fairly it is not quite straightforward. Elliott waves doesn't give us certainty. Nothing in the market can give you certainty unless you know things which you should know because you're doing something like insider trading. They only give us support boxes and regions where we can watch for turnaround and assume certain scenarios have happened. This is the only thing that you can get from Elliott waves, but that is also the only thing you can get from any analysis method. And what we are watching for here is exactly, and of course this could be wrong. Of course, by the time you're seeing this video, this could have happened differently, and then you can flame me in the comments, but I will outline every scenario that could happen and what we're going to do at that scenario. So there is little room for flaming me in the comments, I think. What we think is going to happen is that price is still going to continue further to the upside in something like this pattern and hit the support box. It could only hit 100.2k. It could hit as high as 104.7k. If we have reached this price level somewhere in this white box, we are watching for a turnaround in a wave C. Where exactly this wave C will lead, I will get to in a second. If we, however, see prices breaking down before we see the support one being hit, we're going to be more careful with not assuming that the C wave has already started. And also, if we do see a breakout and we see a sustained break and we see prices just basically sustaining and absolutely just holding the price above the support box, then we also think a different scenario is at play, which we're going to be analyzing then yet again, and of course making a new video on it. So what if price has gone into this box and turned around? What are we watching for? Well, we think that, and we have another support box for this already as well, that the C wave is landing somewhere in this support box. Again, this could mean that we hit 95k and then turn around. It could also mean that we hit as deep as 80k before we turn around. Anything in between is also, of course, possible with this analysis. What are we preferring? We are preferring to see something in basically this area in this white circle now between 86.9 and 80.4k, and then we're watching for a turnaround. Sorry. If we, however, see prices break below the support box and sustain below this box, I will draw this on the chart so you can have an estimate of what this may look like, maybe something like this, and then we drop even further and then we consolidate here. I think it is very unlikely. It is not our preferred scenario and it is not in line with our analysis. It can, of course, happen. Then this support box is what will come at play. This is, of course, very low. It's 71 to 61k, and that is almost a bear market. If this doesn't hold, if 61k doesn't hold, then we're most certainly in a bear market. But the chances, of course, going down here is, in my opinion, very slim. If we're still in a bull market, which we assume, we think the correction will not be as steep. Now let's get to what our trades are going to be. And I will just take this off the chart for easier visibility. Currently, we do not have an open trade. What we are going to do is, and there's two possibilities. You can short in this box and you can long in this box. We don't really like shorting because it's just a smaller possibility for success in the grand scheme of things. In our opinion, we do like going long though. So what we have prepared is a long order between in this white box between those two white lines with a 3x leverage waiting to catch the price. And our invalidation, our stop loss is basically just below here, just below 80k, because we think if we lose the 80k level, then we're probably going to go much deeper. That is our trades. If you liked the video, please leave a like and subscribe, and tell me in the comments what you think is going to happen to the price. And yeah, I hope to see you in the next video. With that, enough said. Bye bye.